welcome to the DMT channel where I offer market commentary, market analysis, and go over some of the tools that I use to analyze the market and occasionally make my trades. Today's going to be a tutorial on two tools that I made using Google Sheets to scan for stocks that show relative outperformance against the index, and then a second tool, which is a watch list comparison tool that compares multiple watch lists to see what stock tickers they have in common. Because if you have multiple watch lists, right, one of your own, one from a new subscription site, maybe a buddy gives you another watch list to see what stocks, what stock tickers will show up across all three watch lists. The ones that show up on multiple watch lists, assuming everybody use different type of analysis, will have a higher probability of showing significant, outperformance. I'm assuming that's what everybody's searching for, anyways. So I'll get started. We're going to close some of these YouTube tabs because I think they're using quite a bit of RAM, my laptop. Okay, so this is my dashboard for multiple American stock indexes. S&P 500, Dow Jones, NASDAQ. This will show the relative volume in percentages. It's free on TradingView. It's a custom indicator. It's based off of Jesse Livermore. If the volume of a stock or index or whatever is 50% or more above what it normally is, say over the past 20 trading days or 1 month, it will turn red. That's when you got to pay attention. Hey, are whales stepping in to accumulate, or are whales stepping in to distribute? Beneath that is the RSI. Beneath that is multiple breadth indicators, percentage of stocks in the S&P 500 above or below the 20-day moving average. Right now, it's right in the mid portion. 50-day moving average breadth, 200-day moving average breadth. Fear and greed index, which is a custom and subjective measurement of overall sentiment. Stuff is all free on TradingView. You don't want to use any one specific indicator in isolation. Ideally, use multiple indicators, or at bare minimum, you have to understand the context in which it's analyzed to figure out, hey, are we in a good spot to buy, good spot to sell, or in, like, most of the time, 70% of the time, in like some type of mid zone where it's not really clear whether the market goes up or down, right? There's no clear edge because you always have to compare your reward to risk ratios. Because when you buy, you want to generally buy towards support, right? Because there's not a lot of room left for it to sell off because it's already at support. But there's a lot of opportunity for it to pump. You could invert that by selling near resistance because there's not a lot of opportunity for it to keep pumping because it's already at resistance. But there's a lot of opportunity for it to drop. Again, you want to get into situations where the reward to risk ratio is skewed in your favor. So we're going to analyze the NASDAQ. And the NASDAQ is the index of mostly tech stocks. Now, what we're going to try to do is whenever the index drops, like from right here to right here, right here to right here, or from right here all the way to right here, because this is an index, it's composed of, say, 5,000 stocks or so. I mean, don't quote me on the exact number, but it's a lot. You want to pick the stocks that show outperformance. What is outperformance? So let's say you can do this measuring tool right here to right here, right? The market dropped 14%, the overall market. And if the overall market dropped 14%, you want to pick the stocks that dropped less than negative 14%. That would be relative strength. Now, relative strength is a concept I first encountered in Stan Weinstein's book. I think his book was called How to Trade How to Profit in Bull and Bear Markets. It's a very old book, published in 1989, I believe, but the concepts are timeless because what makes a market, right? You have a product that's being bought and sold. There's supply and demand for it, and that product is generally a stock ticker, right? It's a stock. Um, there are people behind these decisions to buy and sell, and the decisions people make to buy and sell something is usually motivated by fear and greed. Yeah, there's fundamentals, that's part of it, but all those fundamentals have to be filtered through a human decision, right? So it's not, the markets are not truly rational, not in my opinion, and just straight up they're not. Um, so people, which are subject to emotion and a lot of irrationality, FOMO, fear, greed, they haven't changed in at least 100 years. In fact, I don't think it's changing since the dawn of time. Um, Old school books like Jesse Livermore, um, more recent books, William O'Neill, uh, they've basically done deep dives, price performance of stocks, and it's proven that there are similar characteristics that are repeatable throughout history for outperforming stocks. And one of those criteria is relative strength. When the market drops or pumps or whatever, right? So in this case, when the market drops a certain percentage, the stocks that drop less than that percentage show relative strength. As long as a stock keeps showing relative strength against the index, the reference index, that stock is very likely to outperform when the index resumes its uptrend. Now, if you think ahead, you can actually invert this. Stocks that show relative weakness are great candidates to go short. Right? But that comes with a unique set of risks. But I'm not going to get into that today, nor is that my specialty. So we're going to stick to outperforming stocks that will hopefully turn bullish when the overall market index turns bullish. So, anyways, right? So I explain I explained what relative strength is. We want to scan significant price swings in the index, right? So you can scan from swing high to swing high right here, or down to this swing low. You're gonna have to play around with that. This tool is pretty new. I made it, and I'm still experimenting with it. The reason I had to make it is because I've looked around at other websites and scanners, FinViz, and other paid subscriptions. I've emailed them, and nobody has this tool yet. I don't know why, but they don't. And I played around with some of the results. They're very promising, appears to be very powerful. The only drawback is Google Sheets is quite slow populating the data in the cells. So again, I'm going to get right to it. So let's pick two reference dates, reference date A, reference date B. What they mean is between this date and this date, we're going to figure out the price performance, right? It's pretty easy. You draw the closing price right here, closing price right here. You're going to have a certain negative percentage, right? Because it's lower. But we're gonna get the price performance percentage for all 5,000 plus stocks in the major American stock exchange. Then we're gonna sort them by price performance, um, categorize them by standard deviation, and then pick the best performing ones, and then manually go through our technical criteria, right? Just because you get relative strength doesn't mean, hey, you buy everything that shows relative strength. You still have to factor in fundamentals, technicals, and sentiment. But this will drastically shrink down your watch list from, say, 5,000 stocks, possibly down to like less than 100, or even down to like 50 or 10. And most of us don't have the time or the concentration to look at 5,000 plus stocks you know every single week. But if you're talking like 100, 200, 50, that's easy. It's light work. um so how do we pick significant dates? You're gonna have to play around with this. Swing low to swing low, or swing high to swing low. I like to pick politically active dates as well. So election last year was November 5th, 2024. Right before that, as you can see, was a big sell-off, decent volume, sort of. Right. So October 31st, 2024, one major swing low right here. So we're gonna pretend we went back in time, we're right here. Oh, election day, big significant event. Oh, big sell-off right here because we cracked the 200-day moving average in this orange line. So that would be March 11th, 2025 on the NASDAQ. Then it bounced, then it sold off again, right? But let's say we're right here. We want to see from here to here, which is -3%, right? The index from close to close dropped -3%. The stocks that drop less than -3%, say -2%, -1%, or 0% or a positive percent means they showed relative strength. Because if they drop more than 3%, I'm generally not interested in those stocks, right? Because I want to see stocks that show strength despite the market index dropping, because that would show signs of whale accumulation. So we are going to go to the workbook for the DMT Stock Scanner. Then we also have a workbook for DMT Watch List Comparison. Briefly, this compares multiple watch lists, see what stock tickers show up in common across multiple watch lists. Like, does it show up across two of them? You can adjust. If you adjust this to three, it'll show which ones show up across all three. Play around with it. You can download all these workbooks for free. In the description, there will be links, publicly available. And Google Sheets is free to use. The only drawback, as I've said, because this workbook has a lot of formulas and a lot of data, it is slow. You may have to wait easily a minute, up to 2 minutes for it to populate. So there's an instruction tab in the first page of each of these. Self-explanatory. They have steps 1, 2, 3. Follow the instructions, learn how to use it. Steps 1 through 7, self-explanatory. Follow the instructions, learn how to use it. Now, the first 1, 2, 3, 4, 5 tabs after the instruction tab are where you can enter data. Everything after that is just database stuff, like database where this stuff is downloaded from the NASDAQ site, NASDAQ.com site, right? All 5,000 stocks, the tickers in a specific CSV format. Um, and then on this tab, all you do is enter the dates that you want to do the scan from, and it will pull the closing price. Because how we filter for price performance is based off the closing price, right? Closing price on this date, October 31st, 2024, March 11th, 2025. So we would input October 31st, boom, March 11th, boom. You have to wait. This thing will load, but it's already done. All right. Um, so, for example, if I change this to March 12th, you would have to wait for it to load. And it takes some time. So you're gonna have to be patient. Yeah, like I said, it really does take quite some time. Here we go, loading. Easily up to a minute plus. But, this is what I got to work with. If I don't do this, like, what are you gonna do? Sort through 5,000 stocks? All you need is like a couple of good stocks like, I like to trade seasonality, MRCI.com. Think Moore's Research Center or something. They have statistical studies regarding stock seasonality. They usually pump in Q4, Q1. Some may go away. And if you find best performing stocks, a couple of them, and you size correctly, you can outperform the market, you know, by a small multiple. You know, when I say the market is the index, S&P 500 or the NASDAQ index. So it's still loading. I'm going to change that back to March 11th after this, so we're gonna have to wait again. It is quite slow. Once you get this process down, you sometimes you just got to walk away from your computer, let it load. Unfortunately, I'm gonna have to change this back to March 11th. I just want to show you sometimes it is very slow. Sometimes you may even have to refresh the page. Yeah, hopefully it didn't freeze, but sometimes it freezes, so you have to restart this as possible. Yeah, so it appears to have worked. Um, Again, just wait a little bit. There we go. March 12th. That's the date. So you only, for example, change the date on the previous page, and the whole sheet is quite slow, unfortunately, but best we got to work with at the moment. So you input the date that you want to scan and sort between, right? October 31st to March 12th, and that will show up in the output sheet and give you the price performance of all the stocks and so forth, right? And you also want to clear any filters and then add them back on just as best practice. So again, let's start over. Not really start over, but to recap, between the red and the yellow dates, we had -3%, right? So we're going to go back and change it to March 11th. And I just wanted to show you earlier that, hey, this thing does take quite some time to load, but see, it's still working. I'll select March 11th, and now it's going to repopulate everything. So it could take a few minutes, grab a drink of water, tea, whatever, couple minutes, come back, let it populate. Because once it populates, um, it's a lot easier. So this is the process that takes by far the most time because you have 5,000 plus cells of tickers, and each ticker they have to pull the closing price. And the formulas, even though they're only displaying the closing price, they're actually querying the open, high, low, and close, possibly some other data as well for each reference date. You got two reference date for each ticker. 5,000 times 2 is 10,000. 10,000 pulls at least four criteria. I mean, you're talking 40,000 pieces of information that has to be queried from Google and then displaying a quarter of that into the right cells. And then we're going to have to filter and then sort it to get our useful information. But this is what happens. You have to grab all the data. Most of it is junk. Not junk, but like, not useful to us as traders because we don't need to know what's poorly performing unless you're trying to go short. So again, you saw how long I had to wait earlier. Now we're just basically doing it again. Sometimes it's frozen. You have to reload the whole thing. Hopefully not. Oh, let's do it anyways. Reload this. Sometimes they freeze on you. What can you do? It's important to have fast computer as well. Oh, it appears to have loaded all this stuff. Still processing, apparently. October to March. Okay, so it finished processing that portion, it appears, but still very laggy. What we can do here. Again. Okay, fine. So you might have to refresh the pages a few times. I want to go to the output page, but it seems to be freezing on me again. Hmm. Yep. It does work. It's just unfortunately extremely slow. So to recap, let's go back to TradingView. Between the red and the yellow line, October 24th to March 2025. Index dropped -3% on the NASDAQ. I want to find the stocks that outperform the index, right? Based on a certain standard deviation of outperformance. Um, we're gonna get to it. Okay. So the index dropped -2.34%, according to Google Finance. So maybe they have a slightly, no, that's not -2.3. That's the S&P 500. The NASDAQ dropped -3.6. Did we drop -3.6? It's -3.05. Maybe the reason is this isn't actually the index. This is the futures contracts, but it's roughly, for all intents and purposes, it's effectively the same thing as the index because they usually don't. Um, have a wide spread in difference. So NASDAQ dropped -3.64%. We want to find the stocks that outperform that during this drop. And what we're going to do is we don't sort anything here. Well, we don't filter anything. Let's rephrase that. But we do sort. So see, October to March. Now we go back to this page. Make sure 17, 18, 19. Along the rows, everything's there. There's no filter. We're going to create a filter because we are going to sort this from Z to A. Basically, um, see, a lot of them don't have a closing price. They aren't able to pull them for whatever reason. And if there's specific stocks you're paying attention to, like for me, I like to pay attention to more recently Palantir, NVIDIA, Supermicro, SMCI, potentially some of the crypto stocks like IBIT, which is the ETFs, MicroStrategy. Um, just hit Command F or Control F to search for those tickers, make sure they show. Otherwise, just move these search dates around. Not on this sheet, you got to do on the input sheet. Um, like 1 day forward, 1 day back. Generally, it's not going to be a big deal in terms of the actual price performance. So, we've added a filter on row 16 and Google percent change, right? This is the price percent change. We want to sort this from Z to A, from large to small. Okay. I think it's done. So good. So all that, hopefully price freezing has stopped. Well, it started again. But again, you got to be patient and wait. You see it processing. Shouldn't even take that long. It's weird. I've done this before. I have to reload this again. We're gonna do it anyways. Okay, wonder if it sorted it. Loading. Like I said, once you learn the process, each of these filters, just walk away and then come back. And we want to search for, there we go. So it did sort it for us, what I was looking for. So starting right here, row 650, right? The best performing stocks. Usually they're penny stocks, where we're going to eventually filter this out on the next page. So this page, output page, we only sort. So let's check our sort, Z to A. We've been sorted. Okay, so now we're going to copy and paste just the values, no functions or formulas, from this row 650 all the way to the bottom into the final ranking page, which we can filter the criteria. Now, I have stuff that I've worked on before, and we're going to delete these. But the first step, as always, clear filters, remove the filters. Now all the rows are expanded and shown. Select first top row, Shift, Command if you're using a Mac, Control if you're using a Windows PC. So for me, Shift, Command, down, hit delete. I'll delete everything, my previous work. So if you notice, input page, all I enter are the dates that I want to compare. Output page, I just remove filter, add back a filter, and sort Z through A. And then we're gonna select only the rows that have price performance, because if they don't have both prices, I can't do anything over here. There's not much to do, just you casually browse this. This one I might want to pay attention to, Revolution Medicines, but I'm not really paying attention much to biotech. I don't know much about it, and I suspect a lot of it's very politically based, um, meaning I'm not so sure how much price action matters to it, because it can go sideways for a long time and then something gets approved by the FDA and it pumps, or it can dump at any time if it gets disapproved. Um, right now, I'm mostly focusing on tech. Crypto seems to be outperforming a lot, as you can see by these indexes. Despite the index dropping, Bitcoin pumped 10%, right? It shows between the dates of October 2024, March 2025. Right? Because Bitcoin went from 70,000 to 79,000. So it went up despite the market drop. This shows quite strong relative strength. Same thing for Chinese stocks. I don't have those stocks listed on here. I was not able to pull the data. Gold is very good performance, pretty decent on silver. But again, this is just filtering for relative strength, right? Between the closing prices of two different dates. You still need to look at technical analysis, fundamentals, sentiment. where we are in the business market cycle, right? This is just one tool to look for our relative strength. It's a very powerful tool, but it's only one method of analysis. You cannot use it in isolation. So that's your output sheet, right? And we remove the filter, add it back on, sort Z through A, go to the final ranking. This is where we actually do our work, right? But let's go back over here. We need to cut and paste, not cut, copy paste. So click that row, Shift Command down, scroll all the way up. Command C, copy. It's all listed on the instruction tab in case you ever get lost. This video will hopefully guide you. Right click, paste special, values only. So there's no formulas. So when we do filter and sort through this, it should be a lot faster, not like the stuff we had to deal with prior to this step. Values only, paste. And now, when you look over here, for example, you see these, there's a formula. The Google Sheets has to do all this stuff. Look up the close, for example, E5064, right? 5064 row, E this ticker. It has to look up this ticker, the closing price, um, the date, and the date for this one, the closing price for this one, on the daily time frame, the chart type. It just has to go through all these calculations for all 5,000 cells. Get the market cap, the exchange, yada, 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 right? Keep going. But when we sort over here, that's why this sheet, it takes so long to populate, right? Even though over here, we change the dates, but all this relevant information is pulled to this sheet, which is why it takes like a million years for it to populate. But once you got that data, you copy and paste only the values. Like, look, there's no formula. It's just strictly value. So this is going to be much easier to sort. So notice we have no filter on this. Now we're going to add a filter. Bam. Okay. Then we start to remove the ones that are penny stocks. Penny stocks, I think, are classified as stocks below the price of $5 per share. William O'Neill from How to Make Money in Stocks recommends stocks that are above, I think, $10 a share. Don't quote me on that exactly. That's what I'm going to use as one of my exclusion criteria. So we're going to do that. Filter by condition, greater than or equal to $10. 10, boom. So look, from 4,400 stocks down to 2,900. We're going to do again for price B, which is March 11th. Filter by condition. You can play around with different prices. You can use $5, you can $7. This is just an example. 2,700. Actually, we're going to remove this again, all these filters. We're going to calculate the number of standard deviations from the mean. So percent change, average change, which is the mean, right? This is the formula. This minus this divided by the standard deviation gives you the number of standard deviations from the mean, right? So type it in. That's it, right? Equals parentheses this minus this divided by that. Command enter to autofill. Let's do it. Go ahead, do that. How's that for me? Great. It has standard deviation P and standard deviation S. This stands for population, this stands for sample. Since we have the entire population of the sample set, I mean, this is just statistics, and you use standard deviation P. For practical purposes, there's no significant difference um, in the formula. There is, but it's negligible. So there we go. First stock, it pumped 12x, right? 1200%, 24 standard deviations above the mean, because the average standard deviation is 50%. All right, which is Jesus, that's big. Anyways, so now we're going to add back the filter. Just want to make sure all the data was there before I add the filter, right? You got to use best practices. Once this thing is done, bam, now we're done. Now we exclude all the penny stocks, right? So we're just going to use criteria filter by condition greater than or equal to $10. $10, right? 2,900 stocks. 2,700 stocks. Okay, now market cap. We don't want to deal with stuff that's too small. I want to choose something that's 300 million market cap or higher. Filtered by condition greater than or equal to 300 million. So that's 6 zeros. 1, 2, 3, 4, 5, 6. Bam. 2,300 stocks. Now, the next step. We are, for now, only interested in tech stocks. You can go over here under sector and industry. Sector is more broad, industry is more specific, right? So there's a sector and there's an industry within the sector, right? Or at least that's my understanding. But generally, sector is more broad, industry is more narrow. Just look it up on Investopedia, play around with it, right? So you can select things you want it to show and not show and so forth. Right now, for this example, let's look at only tech stocks. Clear all categories, right? You can look for tech or any specific area, but we're looking up tech, right? So let's select tech. Look, it's going to go from 2,300 down to 260 stocks, right? Pretty good, right? 260 stocks, but this also includes all the shitty performing stocks, right? Remember, the average was -3%. Why would we be interested in going long in stocks that are dropping more than the index? You don't, unless you're trying to short it, right? But you don't short at the bottom of a downswing of the index either. So right now, we're looking for longs. We want to choose the outperforming um, stocks. So we're going to look for ones that perform at a standard deviation of 0 or better, right? They have to perform better than the mean. But I've played around with it, and I know for a fact that NVIDIA, Palantir, PLTR are outperformers over the past roughly 1 to 2 years, and I want to make sure that they're in here, right? So I would Command F or Control F, Palantir, right? 1.85 standard deviations of outperformance during this time frame, right? NVIDIA, same thing. Well, actually, NVIDIA is pretty crappy, right? -0.26. So not the greatest, actually. In fact, that's below average, so you don't want to be involved in that. Let's look up Bitcoin ETFs, IBIT, the BlackRock one. Oh, that's under tech, right? It's not showing, weirdly enough. Okay, no problem. Industry, select all. Let's do it again. You see how fast this sheet is compared to the prior sheets because there's no formulas. Oh, IBIT is not showing. MicroStrategy is also a crypto related stock. It's under tech. So this one is definitely outperforming just because it's in green. So zero point 0.2 standard deviation. So generally what I found is stocks that perform in the zero point 0.1 standard deviation, right? Positive zero point 0.1, they are roughly the top 40% of your sample size. So we're gonna go ahead and use that. We're gonna add back tech, clear all, tech, boom. Okay. So make sure MicroStrategy shows up on here. Yep, it does. Just because I know for a fact it's been an outperformer. It's like a quick way to check everything makes sense or not. So again, we're going to filter for standard deviation P, filter by condition. Like I said, larger than or equal to 0.1 standard deviations from the mean. So 261 roughly shows the top 40%, takes you about ballpark 100, if I had to guess. Yeah, right, there we go. Now we have 100, right? So from 4,000 plus change stocks down to 100. So this is roughly the top 2 or 3% of stocks. So you don't waste your time looking at stuff that is not outperforming. Um, See, mostly tech stocks. This is your favorite stuff. Great. If not, choose your own category, sector, industry, price. You like penny stocks, search for penny stocks. You like small market cap, great. If you like big market cap, enter your criteria. Um, there you go. So this is your list of tickers, 96 of them. Shift, Command down. You would Command C, copy into CSV export, right? This is some of my previous data. Um, Paste it right there. This you can download into a CSV file and then import that file into your TradingView watch list, and then you would get to scroll through them. So I'm going to show you how to do that real quickly. Um, so you hit File, Download, CSV, save it to your desktop or whatever. It would be a CSV file. And then you would go to, for example, this is one of my default setups to watch stocks. You would go over here, your watch list, right? Or create a new watch list or something, right? You would create a new list because we scan from, right, DMT scan dates of, what dates did we scan from? October 31st to 3/11, right? Okay. 10/31 to 3/11/25. Like that. We got a new one, right? New. So the key is have a process, keep it organized so you don't get confused. Open this, import list, right? Whatever that list may be, and then you would scan through it. So I'm gonna try to do that. And Bear with me, I have multiple monitors. So I download the CSV file from the Google Sheets, right? Now I import it into TradingView. As you can see, now let's do a brief scan through this, right? The dates we were looking at were October 31st to March 11th, right? So from right here, option V and March 11th. Between these two dates, right? Swing low to swing low. See, this one showed relative strength, right? Now, of course, it didn't pump, but we didn't know that yet. We're going to do a secondary scan after this, but this would at least give you some idea of the outperformers, right? This is one filter. Let's scan through this. This is like 80 stocks. Palantir's pretty good, and eventually it did pump. But we all know the index had a secondary dump. We just wanted to scan for the first scan because eventually we're going to do a second scan between this date and this date, and then we're going to compare those two lists together. All right, so you have a list. All right, long story short, so this list of stocks, I'm going to move this window back. We are going to put in here, ranking custom watch list. The reason for this, so again, best practices, remove all filters. So when we start over, all right. So in this page, all you do is input a list of tickers that you want to compare under new reference dates, date A and date B. So between here, Shift Command down, delete, and it should blank out everything for me. Boom, blank. All right, that's great. Now, I'm not even sure we need these numbers here, to be honest. I don't even think they're important. But we're going to take that same list of tickers that we compared between the red and yellow. We're going to compare between yellow and blue for the vertical lines, March 11th through April 7th, because outperforming stocks through this between these two dates and swing lows um, is one search criteria. And then we are filtering for the same stocks that show more relative strength on the second downtrend. Okay. And that will hopefully give us a list of stocks that are outperforming and ready to go up when the index turns up, right? So the index turns up around, like, say, right here, right? Should be ready to go long anywhere around here, like mid-April, based on your search criteria over here and your secondary sort. Again, you can play around with it. This is mainly a tutorial. So again, right, March 11th through April 7th. This should be a little bit faster because we're not looking at 5,000 stocks, just like 100 stocks or so. Um, right, March 11th, April 7th, right? We could use tariff day, no problem, if you want. In fact, it's a lower closing price. Probably it would be better, if you ask me. In fact, yes, let's look at that. April 8th, 2025. Final ranking of watch list. Okay, so paste special values only, but it is values. There's no formula in it. All right, so we've got 96. Is that what we had last time? Yeah, 96, that's correct. Okay, so now just these tickers, we're scanning for the relative price performance between new reference dates, right? So we narrowed it down from 5,000 down to 100. These 100 are going to get narrowed down again during the second leg of downswing. Now, you don't have to do two scans. You can, like, let's say, hey, you got a list of stocks that you got from a newsletter, from your fundamental analysis. You would input them vertically right here. And then you would scan for each major downswing in the index and see which of those stocks, based on your fundamental criteria, show very strong relative strength, right? So you're combining fundamentals and technical analysis at once. Okay, so this self-explanatory, not much to say. Um, See, I have more data down here. So again, you have to check the data as always. Drag and drop these. Boom. Okay, so here we go. Okay. Sometimes these blanks will show up in the sort, so you do have to be aware of this thing, use your best judgment. See, there's nothing in these cells, so nothing to really worry about here. 96. Wonder why. Very weird. Regardless, we have no filters, right, up here. Now we're going to add a filter because we have to sort by standard deviation. Again, 0.1. Want to choose the best performing ones relative to the average, or at least the top percentage ones, right? So we are going to add a filter. Again, I expect this to be fairly quick because it's not a lot of cells, right? So this one has formulas. all these forms. You don't have to filter for market cap because we already done it before. Same thing, the penny stocks have already been excluded, everything on this list. So now we sort this. You can choose whatever conditions you want to sort by. Price performance, sort Z to A. Okay, so these are zeros. So again, you got to be careful about that. Command Z to undo it. Um, what we're going to do is sort by relative price performance. I don't know why this stuff. Yeah, so always you gotta use your own judgment here. We know there's 96 rows to make sure there isn't like gaps of blank spaces in between. Yeah, 96. There you go. That's good. So right off the bat, you can tell Asana was a very strong performer. You can just see this, right? During market downtrend, these things are going sideways or barely dropping. These are the ones you really want to pay attention to, regardless. Point 0.1 and higher. That's what I would pay attention to, right? The average of these is negative 14%, so anything above that's pretty good. If it was me, I would I would sort this or filter by condition actually. Um, Greater than or equal to again 0.1 or 0. You want to at least better than average, so 0 in fact. So right? 96 divided by 2 is 48. So you only choose the ones that are performing average or above. So these list tickers are what I would pay attention to. And you can see, hey, MicroStrategy is in here. Pretty interesting. Not really, but Command C, another CSV export. Um, Go ahead and delete your old stuff. So we've narrowed it down to, oops, see, you gotta paste special values only because you only want the tickers. 48. Download this into a CSV file and put it into your TradingView watch list. I'm gonna go ahead and do that right now. I'm gonna take some time. So this is gonna get deleted. Download into CSV file. Save that to my desktop. call that my secondary scan. And then we're going to create a new watch list and upload that. Okay. So as you can see, this one has 45 stocks, and these should be the outperformers because from October 2024 to the first leg showed outperformance. The second leg, it showed more outperformance. So it should be better. See? The second leg, it didn't even make a lower low. So if you got in, it would have pumped and almost double your money right here. Asana is something we keep hearing about. This one's an outlier because it dropped a lot on the first leg and it didn't drop a lot on the second leg, but it's pretty shit performance. So from a technical point of view, it's no good. Um, let's just browse through this stuff real quick. See, the point is it's some form of showing relative strength right here. See, the market dropped. This thing held its lows or held price consolidation, held relatively speaking, held more consolidation during the second leg. In fact, during the entire drop of the index, this thing went sideways. So it went from 240 ballpark up to 300. Um, what is that, a 30, 25, 30% move? It's pretty strong. I mean, uh, in fact, if you look at the NASDAQ, it went from 17,000 to 21,000, right? So it's a 4,000 move, 10, 20. 25% move. And then if you measure this, just going to all-time highs, let's see if it at least matches that or increases it. About the same, regardless. From here, 42, 52, so another 25% move. But my point is, we're also late in the market cycle. Or I mean, we'll go probably higher in the S&P, maybe probably all-time highs before we roll over, but this is really a powerful tool to use coming out of a bear market. Palantir, same thing, showed strength on the second drop in the index. It didn't drop and it pumped and had you got in 75, 50, so you're up like 60, 70%. Again, you still need to use fundamentals, technicals, but this is a secondary tool, right? So this one went from like 14, 15 bucks, 20 bucks. So they're all decent stocks that are pumping. CrowdStrike is pretty interesting. I've seen this one around. Okay, 300 and change up to 450, so 30%. Okay, not bad. But this is a demonstration on how you use that tool. Now, um, let's go ahead and look at the watch list. These are some of the notes that I've taken. Um, Search criteria, sectors, and number of standard deviations. So you're gonna have to play around with that. I'd recommend. Um, yeah. So give me a second. Let me move this window over. Okay, so I wanted to show you, all right, how we did a secondary sort based on a custom stock list, not all the stocks, just stock list, right? We can scan for relative performance. How do you use the watch list comparison tool? So you got, say, one list here and a second list here, right? So list A, let's say I'm user A, and we got user B, right? You work in a team or you subscribe to a newsletter. You got list C, right? Um, it doesn't matter what tickers are on here. It just shows you how frequently a ticker shows up on multiple lists, right? So we had a list of tickers right here, right? Under CSV export, and it's 48 of them. Okay, we're gonna scan, cut and paste these, not cut and paste, copy and paste. Command C. We're gonna paste special values only. I don't know why I didn't go through. Command C. There we go. Command V. It's pretty fast because there's no formulas involved, and there shouldn't be. Yeah. So what this does is show which tickers show up across how many watch lists, right? Watch list A, watch list B, watch list C. If I use watch list A as the reference, that will be the most important to me, right? So we got 88 tickers, 48 tickers, and then some more tickers over here, whatever it is. Okay. Obviously, you want to clear everything before you do it. Now, let's find out how many tickers, which tickers will, this is also a unique list, right? So it's just a function. It flattens everything of this entire data array from list A through C, from here all the way to here, all the way down, Um, and it tells me how often each ticker shows up, right? In a unique list. So right off the bat, we can see IONQ, PLTR, ASAN, right? Palantir, Asana. These things are very common for some reason, right? So if it keeps on showing up on your scans for relative strength, that is a very clear signal that you should be paying attention to those stocks on the bullish side, right? For a bullish bias, whenever the technicals lined up, the fundamentals, macro, everything lines up, right? This is like, hidden strength. When you search for bullish stocks, potentially bullish stocks during a downtrend. So when the market resumes its uptrend, you're already ready to go long. So this shows all the stocks that are showing up in user list A and another user list, as long as the stock ticker shows up twice or more. I can adjust this input to make it 3, just follow all the instructions, self-explanatory. Number 3, see, now you have less stocks that will show up across all 3, right? IONQ, right? You can IONQ 1, 2, and I'm pretty sure there will be one more. So let's look it up. IONQ, there we go. Right? IONQ, IONQ, IONQ. Shows up 3 times and it shows up in list A. Pretty self-explanatory. PLTR. Um, Palantir shows up list A, list B, right? 1, 2, 3, and it shows up also in list A. These are the ones to pay attention to. Now, there is a way to sort this, right? Instead of looking through all these stocks, this gives you the outlier performers, right? And then we're going to look at these again. Um, what you do is you select. So I've already sorted this. I don't even know why it's slow. It shouldn't be slow. Delete everything in columns A through E. Follow the instruction tab over here. A through E, copy columns A through E, and paste special values only into sorted ranking watch list. So obviously I have some work done already from here. So we're going to select A, column A, right? You don't have to, if you select here, it'll actually delete the stuff on top. You don't want to do that. So A, B, C, D, E, right? Shift, Command down, delete. Now it's blank. The reason is you can't sort on this side. If you sort, because there's formulas here, it'll screw everything up. So when you paste special values, it'll be fine. Everything will work out. Yeah, it's tedious, but what else can you do? Again, select columns A, Shift, B, C, D, E. Command down, Command C. Oh no, I didn't get you everything. See, you got to be careful. You got to check everything. Boom, 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 boom. Check. Okay. Command C. Um, Go to sorted ranking watch list. A special values only. And this calculates everything for you. Perfect. Now this may already have a sort. Filter by condition, none. Okay, let's check this out. Filter by condition, none. Okay, good. Pay attention if it's duplicated on list A. So again, you can sort this. It's not like particularly hard. So remove filter, add it back. Should have done it before I pasted, but there wasn't much on here. So filter by condition or sort Z to A. There we go. Um, so assuming list A is the most important, it shows all the tickers that are duplicated on list A and another one, right? This will also show tickers that show across all three, right? Play around with this. You know, regardless, you want to sort this Z to A as well, right? The ones that show up the most across all three tickers are by far the most important. All right. So these tickers are quite important. So again, Command C, CSV export, and let's just see, because I did this the previous day, see if they come out to be the same thing. Just eyeballing this, they appear to be very similar. In fact, they appear to be exactly the same. There's equal, unique. Let's just try this. Equal, unique, flatten. 14. Oh, there is one unique. I don't know which one it is, but it doesn't matter. So regardless, this is a list of tickers, 13 tickers that have outperforming stocks that outperform the index over two scans. And you would plug and chug this into TradingView. Um, so you would save this and download it into CSV format and then import it into your watch list. But I'm not going to do that. I'm just going to manually type in the tickers. So because I already have it saved. Right. So Duolingo, Palantir, not necessarily in that order, but same thing. So November to March 2020, March to April. See, this one pumped pretty good. 300 to 520. That's a 70% move. Palantir, fairly strong. 77, 70% move. Asana, not so good, but for technical reasons, it's not very good because it's underneath the 200-day moving average. So from technical reasons, not good. These are all above the 200-day moving average. Um, Again, right, strong uptrend. So you do need to know TA, possibly fundamentals. You got to look at earnings per share growth as well. So just browsing through this, right? It didn't sell off. This is still near a bottom, but there's a lot of overhead resistance over here. That's relatively recent. Those are the problems. ONQ had a decent pump, but this is looks like severe distribution here. I don't know what to think of it, but you can see it catches all the ones that are holding support or consolidation despite the market selling off. So this pump from 240 to 280, percentage move, it's not like that much better than the index really, but again, it's already pumped significantly. So like this one, right? If the index dropped from here to here, this thing didn't drop. That's severe strength. So you could look at analyze swing high to swing low, and then if you got this at some point, hey, across, this is on your watch list. Earnings growth per share is increasing during consolidation, and you see, hey, it breaks out right here, pop, pop, and then you ride that. I mean, that's how you're supposed to make your money, right? 200. It's like what, a 40% move? Yeah. So MRCY, same thing. So again, it catches all the ones that have decent strength. Folio, but we're late in the market, so it's not like the greatest at the moment. Like right here, here to here, so it really lets you know, like right here, this swing high, this swing low, that's quite significant. That's holding consolidation, right? And then you ride that, what, $13 up to 30, you double your money in like what, 6 months, 5 months. So to recap, we've went over the stock scanner tool and the watch list comparison tool. Quite a long video, but hopefully it's been helpful. And that's it.